welcome to Mad Money. Welcome to Cramer. My friends, I'm just trying to make a little bit of money. My job is not just entertainment, but to educate, teach you. Call me at 1-800-743-CNBC. Tweet me at Jim Cramer. So it was the government shutdown and some insane comments from OpenAI about a government backstop because of gigantic spending that caused a sell-off? I think so. Now that the shutdowns are almost over and OpenAI is starting to learn about foot-in-the-mouth disease, the averages come roaring back, with the Dow gaining 382 points, S&P jumping 1.54%, and the NASDAQ falling 2.27%.
House of pleasure.
Best day for tech since May. I'm not surprised at this turnabout. Why? Because I've learned to trust the market and not start betting against it because we had a tough week. As much as the stock market seems nuts, it's not as nuts as you think. That's what everyone who shorted the AI plays found out today. I know that there are hedge funds that make fortunes shorting the market in 2007 based on the quicksand of bundled real estate trash. There are hedge funds that crushed it in the crash of 87, and stock valuations went sky high. I was one of them. There were many money managers who saw the COVID crash coming and sold as much stock as possible, then got short. They made out like bandits as long as they didn't overstay their welcome. And, of course, there were people who shorted stocks, including me, that were dot-com bombs. And now the same short sellers, not me because I can't sell, I don't own stocks, are trying their hand at betting against the great data center build-out, including its most visible winner, NVIDIA, as well as the wild run in artificial intelligence, as exemplified by Palantir. The shorts think that because they were successful at shorting one theme, they'll be successful at shorting another. I say not sufficient. It doesn't work like that. NVIDIA and Palantir are run by some of the smartest people in the world, Jensen Huang and Alex Karp. Are their stocks expensive? It depends. NVIDIA stock has a reputation for looking expensive on forward earnings projections and then turning out to be inexpensive when we see the actual earnings and they come in better than expected. Yes, it's still growing that fast. Palantir's harder. Alex Karp seems like a renegade, but he really isn't. He's constantly trying to explain why his company's worth what it is, and he never stops crushing the expectations. I believe in Karp's leadership because you know what? I've been around. Hey, you know what? I started a tech company myself, TheStreet.com. All I wanted to do was to grow fast and have terrific operating margins like Karp. Why? Because that's what every single investment bank and venture capitalist I talked to told me I needed. We grew fast, but the profitability never caught up, so the company hung on for years and years. Then in year 25, got a hostile bid for almost nothing, call it the cash position. So my hat's off to Palantir. I wouldn't short that thing, even after this run. I don't go out very much. But when I do in New York, and it's not with my summit buddies who never talk stocks, people just want to ask me why I keep supporting Palantir, which when it was at 50, I said would go to 100. When it was at 100, I said it would go to 150. And it was at 150, I said it was going to go to 200. And now I think it's going to 250 after this pit stop, 178 up to 193. Hedge fund managers I meet almost all want to tell me, you know what, you're dead wrong, Cramer. I don't feel very wrong, especially after talking to multiple clients who actually swear by Palantir. I wish the Karp wouldn't put such a target on his back, but he's a crack shot, so who knows? Now, I know that Palantir is richly valued at almost 300 times earnings. As Karp says, and I quote, this ascent has confounded many financial analysts and the chattering class, end quote. He goes on to say, whose frame of reference did not quite anticipate a company of this size and scale growing at such a ferocious and unrelenting rate, end quote. Then he gets a little too personal with the criticism, but in the end he points out, quote, Palantir has made it possible for retail investors to achieve the rates of return previously limited to the most successful venture capitalists in Palo Alto, to which I say, amen. Look, what do you want me to do here? Palantir and NVIDIA are two of the biggest winners I've ever seen, and individual investors have indeed made fortunes in both of them, while money managers sat on the sidelines for the most part, or shorted them. The ones that I've talked to, well, that talk to me, I don't talk to them. While Jensen Huang and Alex Karp have very different personalities, they both genuinely seem to care about the individuals in their shareholder base. And look, they've done an incredible job for you. I know this. I was in West Hollywood at a Total Wine & More this weekend signing my wife's mezcal bottles, and many NVIDIAns showed up and let me see their statements that told me how much money they made. There were 5 grown men crying. My wife had to comfort them. That's because they had become NVIDIA millionaires. They never expected to make any real money in their lives. Coincidentally, by the way, I'll be signing copies of my new book, How to Make Money in Any Market. It's going to be at the Barnes & Noble on Atlantic Avenue in Brooklyn, 6:30 p.m. on Wednesday. I want to meet you. I want to sign your book. I want to take pictures with you. Barnes & Noble, Brooklyn, Wednesday, 6:30 p.m. You need tickets. You can find the ticket link on X, also known as Twitter, at Jim Cramer. Just Just come see me, will you? So let's go full circle. Why did everything connected to the data center soar today? Simple, because if the companies that are building out their data centers stop doing so, they'll worry that they'll be left in the dust by competition. OpenAI Sam Altman will go after Meta's social media business, or will go after Google's search business, or will go after Amazon's retail business. Maybe they'll pay Apple to be the default AI platform on the iPhone. OpenAI is already too big to fail, and they can raise insane amounts of money because ChatGPT remains the best of the chatbots, and Altman is an unlikely rainmaker. But how about the rest of the market? Here's why I didn't panic on Thursday or Friday. When I was checking the Travel Trust positions, endlessly bugging Jeff Marks, my co-portfolio manager, about what to do. I trust the market. You see, I believe in it. That's because, as I say in How to Make Money in Any Market, it's never let me down in 43 years of investing. At a certain point, it's empirical. Am I supposed to abandon the leadership and get out now because some short seller who was once right about something is arguing that artificial intelligence is now a house of cards? Look, we did have a problem, but not with AI. The problem was consumer confidence. We're close to Thanksgiving. We all saw the chaos at the airports. I got to the airport at 9 o'clock. I got home at 3:30. The problem is I was at the airport at 9 a.m., and I got home at 3:38 a.m., in other words, all-nighter. Look, you get enough stories like what happened to me, and people start canceling their Thanksgiving plans and hunkering down, and I don't blame them. I certainly would. That can ruin the holidays. It can certainly ruin our GDP growth for the holidays, too, and that's a huge part of our economy. When we got signs that there could be finally an end to the government shutdown, the first one that seemed to cripple the economy because it went on for so long and practically shut down air travel, the money came pouring back to the stock market. That's what happened today. Pretty obvious. There are so many companies involved in this data center build-out, which is the envy of the world, except for China, which is doing it faster. I always complain that American experts are way too eager to give the Chinese government the benefit of the doubt over us. We assume that the Chinese Communist Party never makes any mistakes. But if they're building out furiously, are they doing something dumb? I don't think so. The bottom line, with the government potentially about to reopen, it's back to business as usual. And that means the data center stocks come roaring back, as they should. Even if you have zero faith in Silicon Valley, you should recognize that the Chinese are doing the same thing and respect that all we are trying to do is keep up with them. And they're our number one competitor. And man, are they hard to beat. Let's go to Ian in Florida. Ian.
Booyah, Jim. How you doing?
Booyah, Ian. I am doing well. How are you?
I'm doing excellent. Excellent. Congratulations on the book, Jim. Looking forward to getting mine signed in South Florida sometime soon.
All right. Come up to Barnes & Noble on Wednesday in Brooklyn, 6:30. I'll sign it. Well, let's go to work. What do we got?
I'll see you there. Jim, I'm looking at a stock I wanted to start an entry in. Definitely best of class, and it's almost like 20% down from its highs. And it's actually got a split coming in about a few days. It's Netflix.
Yeah, I like Netflix aplenty. I think that Netflix understands exactly how to make a movie, how to make shows. They know what people want. And you know what they really have? It's a subscription business. And I like Costco. I like Spotify. Subscription businesses, they're for me. You know what? We're going to go to Shirley in Texas. Shirley.
Hi, Jim. My question is, and I've enjoyed your knowledge and your show for many years now.
Thank you, Shirley.
My question is that I've held Broadcom for several years. Is it a hold or sell?
Hold or sell? Broadcom's a buy. I mean, we're talking about Hock Tan. He is major great. He's one of the greatest CEOs ever, and I think that the company is doing fabulously. And if anything, it's a big position for Travel Trust. Joe in Indiana. Oh, my God, the Kings of football, Joe.
Thank you, Mr. Cramer, and thanks for everything you've done for me.
Of course.
I have a stock that I keep hanging on to because it pays such a big dividend, but it just seems to keep going down on me. BlackRock.
Okay. BlackRock, I think that BlackRock's pretty good. Now, it did have a dip here, and I like it. I'm going to throw in Blackstone. I'm going to go twofer. I like BlackRock and Blackstone, but I own BlackRock for the Travel Trust. I think Larry Fink is terrific. I want to buy that stock right here, right now. Okay, today the market rallied because we got signs of the shutdown finally ending. That's all it took to bring the AI stocks back up, too. Don't forget, the data center is the greatest theme in this year of magical investing. On Mad Money tonight, Amgen announced some very promising heart attack prevention results in the phase 3 trial of its drug Repatha, which I'm on. But what drug am I my not on. So could the stock have more upside after this? Well, let's check with the CEO. Then could D-Wave Quantum be one of the, I'm not on all the drugs, that was a joke. Could D-Wave Quantum be one of the better plays in the speculative quantum computing space? I'm getting the latest with the company's top brass. And you know, we've begun following the regional and national story that is Dutch Bros, and they have some coffee, and believe it or not, I had a little this morning, and I had a little right before the show, and I got to tell you something, I'm feeling darn good even though I go to bed last night, but that's just the way it is when you have the Annihilator. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
In the last few weeks, the long dormant healthcare sector is finally starting to show a little life. It's so inexpensive, it's crazy. Take Amgen, the big biotech company with a host of drugs for cardiovascular disease, inflammation, oncology, all sorts of rare diseases. This stock's up roughly 20% from its late September lows, including a monster run last week when Amgen reported a spectacularly better than expected quarter. Then this past weekend, the company announced some very promising heart attack prevention results from a phase 3 clinical trial of Repatha. That's their cholesterol drug. So could this stock have more room to run now that the healthcare sector seems to be back in style? Let's take a closer look at Bob Bradway, the chairman, president, CEO of Amgen, friend of the show. Get a better read of the quarter. What comes next? Mr. Bradway, welcome back to Mad Money.
Thank you, Jim. Pleasure to be with you.
All right, so Bob, I think that people have to understand that there is no level of cholesterol that's good. That's something we've determined, but there's no way to get it down to the level that would make it so it's insignificant, except for with your drug.
Well, Jim, I think what we've demonstrated with the data that we shared this weekend is that when it comes to preventing, for example, heart attacks, by lowering LDL to a target of 45, a median of 45, we were able to reduce by 36% the risk of a first heart attack in those subjects that we studied in this trial. So there's a great deal of excitement as we're answering for the first time whether by adding Repatha on top of optimized therapy for those who are concerned about the risk of a heart attack or stroke or other major heart problem. We demonstrated that by adding Repatha on top of what was otherwise considered to be optimized therapy, that we could prevent those first occurrences, again, of a heart attack by 36%, prevent stroke, and even a strong signal suggesting we can prevent cardiac death. So these are exciting data for the field. This trial answered questions that have been on the mind of investigators and physicians and patients for some time. We've now unequivocally answered that when it comes to LDL cholesterol, lower is better, and that even to a targeted median or an achieved median, rather, of 45, we're able to demonstrate meaningful benefit over what was otherwise seen in the placebo group that was controlled on, just to emphasize the point, on what was previously considered optimal therapy for those patients.
All right, look, I'm in that camp. I went, mine was around 60. I thought that I was fantastic. All I heard was it was good. And I immediately was prescribed Repatha. And I said, I don't want to take this shot every other week. It's ridiculous. My cholesterol's low. And my doctor explained to me that there is no level that is low enough. Now, are there people in your study who would, doctors, who would say, you know what? If I were a GP for anybody else, I would tell them, did you see the results of this? You got to take it. I mean, because I know you're not a doctor and you're not telling people that, but wouldn't, if you went to med school, wouldn't they study this? And therefore, after they graduate, put people on this?
Well, Jim, I think what the study does is it helps people appreciate that, again, when it comes to LDL cholesterol, lower is better. The sooner you get to the lower levels, the better, especially for people, for example, who have diabetes or people who, for other reasons, are concerned about their risk of a heart attack or stroke. These trial data unequivocally suggest that that's a conversation that's worth having with your physician.
Right.
So, again, we're excited about what these data represent for the future of reducing heart attacks and strokes in this country.
I know that this is not something that I'm about to ask a question that I know you can't point blank answer, but maybe you can help me see what they say, what people are saying. But my doctor said, okay, listen, by the way, this also lowers plaque in your brain. I said, well, that's impossible. It'll also be a study. everybody would know that. And he said, well, we're prescribing it to people because we think it's right. We're doing a study. Is there really a nationwide study on plaque?
Well, Jim, I'm not aware of any placebo-controlled studies underway to evaluate that question. I think you're referring in particular to whether there's any benefit in Alzheimer's disease from these treatments. I know there's a lot of interest in that question, but I'm not aware of any placebo-controlled studies underway to evaluate that.
Right, that is absolutely correct. That was what I'm taking it for, besides cholesterol. And my doctor expressed me said that this is it. This is the only one that they're having any success with. I don't want to, let's put it this way. It's a miracle drug. And I think people need to know that. Now, a lot of people are going to spend most of the time talking about Maritide. I think Maritide could be big, and it's going to be one of ultimately many. As I talked to Dr. Boyle this morning, can you give us an update of what we should be looking for, some data points?
Sure. I'm happy to talk about that, Jim. But just before moving off of Repatha for a moment, let's not lose sight of the fact that the leading killer of people in the United States and all around the world is heart disease.
Absolutely.
And again, we know that 99% of people who have a heart attack have a modifiable risk factor. The biggest modifiable risk factor for those patients is level of LDL. Again, what we've demonstrated here is a very significant opportunity to reduce the risk of those first heart attacks by driving people down to a median LDL level of 45.
No,
so we're excited about what that represents.
But I didn't mean to.
Sorry, Jim, the only thing I wanted...
You're right. Look, obviously I'm in your camp. I mean, there are a lot of people taking statins. They're not doing the job.
For many people, they're not doing as everything that could be done to reduce the risk of those first events. And the other thing, Jim, I just want to point out is one of the things we did a few weeks ago in anticipation of being able to share these data are that we made the product available to people in the United States at $8 a day. So anybody who wants to go to amgennow.com can receive Repatha for $8 a day. Most patients, by the way, are paying much less than that out of pocket. But for those who are either uninsured or for whatever reason are buying this drug for cash, can now get it from amgennow.com at $8 a day. And when TrumpRx.com is available online, we'll be adding it there too. So the good news is this drug is available to American citizens at the lowest price available in any of the G7 countries. And again, it underscores our belief that this is a medicine that can benefit millions of patients around the nation. And we want those who are appropriately eligible for this therapy to have access to it.
It had been a much higher price, right, sir?
Yes, we have lowered the list price on Repatha twice now. The list price, we lowered by 60% the list price to be able to make it available to patients for, again, $8 a day.
No, look, it's important. It just happens to be a day when Dr. Boyle paid a lot of money for something that may or may not be, that is, I think, speculative versus Maritide. So it's not prurient interest. It does make me, it's just important to ask you about.
Sure. Well, Maritide obviously is our molecule, which is differentiated from what's available in the field today. We designed a long-acting molecule that we're excited about for what it has demonstrated in its ability to reduce weight in people who are obese or living with overweight. And the therapy is rapidly enrolling in phase 3 clinical development, reflecting the strong interest in the differentiated approach that we bring with Maritide. So in addition to what we're confident we'll be able to do for weight loss, we're also excited about what this represents for patients that have type 2 diabetes. The field has for many, many years been seeking to have a long-acting type 2 diabetes medicine. We believe this will be dosed monthly or less frequent for both overweight as well as patients with type 2 diabetes. And when we look at the data that we've generated so far, we're also very excited about what it represents for other diseases like heart disease, as we've been discussing. So we think this has the potential, by virtue of what we've seen so far, in its ability to lower blood pressure, to lower inflammation, to lower blood lipids, will also be an attractive therapy in the field of heart disease.
Well, excellent, Bob, and thank you for sharing with us the very important data that I think should change the way medicine is done in this country. I've said that to you off camera. Might as well say it to you on camera. I want to thank Bob Bradway, CEO of Amgen. Thank you, Bob. Good to talk to you.
Thank you, Jim.
This is a very big drug that's going to do many, many things, and you should ask your doctor whether it's right for you. I know I sound like a commercial. I don't care. Just want to save your life. And my respect for the break.
Coming up, Cramer's getting to the bottom of the hype around quantum computing with one of the main players in the space. Next.
Over the past few weeks, this once red-hot speculative side of this market, it's getting crushed. I mean, just look at the quantum computing place. We had D-Wave Quantum on the show in August. Stock was at 18 and change by mid-October. Then it peaked at nearly $47. But now I think this makes sense to some degree. It's back below 30, down almost 40% from that high. That's where you got to start thinking about getting in. Last week, D-Wave reported its third quarter results, and the report was really a perfect example of why these stocks are so tough to game. On the one hand, the numbers were all better than expected. On the other hand, they only had $3.7 million in revenue last quarter because the technology is still in its infancy. Stock actually rallied almost 4% response, still finished last week down nearly 20%. Remember, last week was bad week for these stocks. So what the heck do we do with the thing? Are we witnessing a buying opportunity here, or is the stock still overheated, given that it still remains up almost 250% for the year? Let's take a closer look with Dr. Alan Baratz. He's the president and CEO of D-Wave Quantum to find out. Hey, Dr. Baratz, welcome back to Mad Money.
Hi, Jim. It's a pleasure to be speaking with you again.
All right. So, Alan, I think I don't want to bury the lead here. You have had this quarter, the one that we are in right now, a huge amount of business. You did 2.4 last. You were already up to 12 million. So something's really going on. You are beginning to get some big orders from people who know how to use your product and are doing things substantively with them, correct?
That's absolutely right. We've had an amazing year so far this year, as we're starting to see both our system sale business grow, as well as our cloud-based quantum compute as a service business grow.
Now, we are starting to talk about situations like, I'm just going to mention some, Japan, the tobacco, which people may not realize, has a medical arm and is using you.
That's correct. And Japan Tobacco is a really interesting example because this is the first time that a quantum computer is being used for AI model training. Basically, what Japan Tobacco has done is used our quantum computer to train their large language model for discovery of new molecular structures. And what they're finding is that by using our quantum computer, they are able to generate better structures faster with less power consumption. And when I say better structures, I mean more well-suited to human drugs. And this is really important because I think we all know that quantum is going to be a really important component of AI. And this is the first time that anybody has ever been able to use a quantum computer for a commercial AI application.
Now, also, I don't want to, I should spend more time on them, I know, but there's some other customers. People have to realize how important this is. Huge customer win in October is Swiss Quantum Technology. Now, this, again, is a huge agreement for you, and it just happened. I don't know it's where it is right now, but what they're doing with it, but it's obviously very big.
Yeah, so basically, this was a deal to provide 50% capacity of one of our quantum computers in support of Italy's digital transformation initiative. So they acquired 50% capacity of our system for 10 million euros. The system will be placed in the Lombardy, Italy region, and then we will be working together with the Italian government and a new consortium called Q Alliance to basically train a quantum workforce in Italy, to do new research leveraging our quantum computer, and to explore commercial applications.
Now, one of the things that I find hard, and you actually touch on this in your conference calls, is everyone claims they're the best. I mean, for instance, there's a company called Quantinuum. I know this because my child trust owns Honeywell, which says as a full stack offering, Helios, which is their current one, is one of the most advanced commercial quantum computers today. And I read that and I say, well, I don't know, are they ahead of D-Wave? Are they behind? How do we gauge things?
Yeah. So first of all, Jim, D-Wave is quite unique in the quantum industry in that we are developing to bring to market both of the main architectural approaches to quantum computing. They're called annealing and gate. And they're each good for solving different types of problems. So if you've got a problem that requires annealing, we've got you covered. If you've got a problem that requires gate, we've got you covered. That makes us the only quantum computing company in the world that can address the full market for quantum. Now, second, we use superconducting technology. And we believe that at the end of the day, superconducting will win. And the reason is speed. Superconducting quantum computers are 1,000 times faster than any other mode of quantum computing. So faster than trapped ion, which is what Quantinuum uses, faster than photonic, faster than neutral atom. So why would you ever want a quantum computer that's 1,000 times slower? You wouldn't. That's why superconducting at the end of the day is going to win. And finally, our annealing quantum computers are the only ones in the world that have been able to solve a real world problem that can't be solved classically, what we call quantum supremacy. And that makes us quite unique in the industry. No other quantum computer today is able to do even a little bit better than classical, let alone solving problems that classical cannot solve. But our quantum computers have achieved that goal. And then, of course, we've got customers that are using us as a part of their business operations. We talked about Japan Tobacco. This quarter, we announced BASF, large chemical company, North Wales Police. So we are commercial today with our quantum computers. And that makes us very different from everybody else in the quantum industry.
I will say that Arvind Krishna might disagree. The CEO of IBM has told me that he has commercial quantum computing, and I think he's a good guy.
I'm glad you brought that up. What you need to do is ask those customers what they're actually doing with the IBM quantum computer. Are they doing research experimentation, or are they solving business problems as a part of their business operations? I think you'll find they're doing research experimentation because those quantum computers are not yet at the point where they can solve commercial problems at scale. Only D-Wave's annealing quantum computers have reached that point. And you should go talk to our customers. In fact, we have a yearly customer conference. It's called Qubits. Our next one is in Boca Raton at the end of January. And I invite you to come out, be there. You can hear from our customers about all the things that they're doing. You can corner them and talk to them one-on-one and ask them what they're doing with our
I want to do this. I believe in the technology. Now, people are going to say you believe in going to Boca Raton because you were there for the last 4 years in January. That is not the reason I want to go. But I've got to tell you, Alan, I think that this is very good because I believe in the technology. The stocks come down really big, so it's not like people are buying at the top. And I really appreciate you explaining to us what you're seeing and what you're doing. Alan Baratz is the president CEO of D-Wave Quantum. Thank you, Doc. Really appreciate it.
Thank you.
Mad Money's back after the break.
Coming up, is now the right time to start brewing a position in Dutch Bros? Cramer sitting down with the CEO of the West Coast coffee chain. Next.
Look, I've been up all night because I flew back on some red eye. I was supposed to be in at 11 in the morning. I got in at 3 a.m. And the only thing that's saving me is this drink. You know what this drink is? This is the Dutch Bros Oregon-based drive-through coffee chain drink that is going to keep me awake right through the Eagles game. This time, the company just reported a nice top and bottom line beat. Stock got hit the next day. That was wrong. Sold up 4.2%. That was wrong. Mainly because Dutch Bros saw its shop-level margins come in a little bit light, but that's ridiculous. After the initial pullback on Thursday, this thing rallied on Friday, and then, of course, it really roared today, as it should have, surging 6%. It's almost like Wall Street revisited the quarter and realized it was a good one upon further review because people just don't understand the stock or the company or the drink. So let's check in with Christine Barone. She's the president of Dutch Bros to get a better sense of the quarter and what's happening here. I'm not talking this fast and strong because I've had the drink because I haven't had enough. But the fact is that this is something that worked in Oregon. And it's working around the country.
It is working around the country. We had an awesome quarter. Our same shop sales were up 5.7%. And our customers are loving what we're doing.
And that's a blended average. The ones that you own were even better.
Yeah, we had a great quarter. So our company-owned same-shop sales were up even more, and they were up at 7.4%.
Now, you are in half the states in the country. Is there a state where it's not working?
No, we have been well received everywhere we're going. So really excited to continue to expand. We opened a number of new states this year. We're up to 24 states now, and just about 1,081 shops we ended the quarter with.
I like a situation where there's a roadmap. How many do you think you can handle in this country?
Well, our total addressable market that we shared in Investor Day is about 7,000 shops. So we have a long ways still to go.
How expensive is it these days to find help to be able to build new stores?
So we are finding real success as we open new shops. We have developers help us as well. And we have had no problem finding new shops and opening new shops.
Now, I want people to understand that if I go, you're going to find new drinks all the time. It's not like there's just the same menu. What am I going to see for the holidays?
Well, we have all kinds of great new drinks for the holidays, and some of them are returning. We do have a wonderful holiday cookie that is a new drink.
Really?
And you can get it across lots of different platforms. So I had one the other day with protein milk.
Well, you have the edge on me. It seems like that young consumers, Gen Z, have discovered you, and I'm trying to figure out what they think, what draws them. What is it that's different? What are they excited about?
Yeah, so as we look at our customers, it's really a full experience that you get at Dutch Bros. And so when you come through our drive-through, our broistas just love to engage our customers. They love to have a little conversation with them. They love to remember them and their names. And so I think that not only do you get an awesome drink, but you also get that conversation.
Now, there was a period where it was hard to find work. Now you're no problem. You're getting good young people to man the ship.
Yeah, so we have great broistas, and that's really where the brand starts. And it's all about our people, and they want to come work in the environment. We have great music on that we're playing. You get fun drinks while you're there, and you're working with a wonderful group of people where we invest a lot in training. So you're working alongside someone who's really trained up and knows what they're doing.
Now, there are whole parts of the country that do not have Dutch Bros, correct?
Correct. We have a long ways still to go.
So where are you under-stored? I mean, is it in the Midwest or is it up here? Because a lot of people, I think that if you open one in New York, the stock would go up $20.
Yeah, so we have lots of shops still to go. We don't have any yet in the Northeast. We just opened our first one in Illinois. But even in the markets where we've been for a long time, we still have a lot of growth ahead of us.
Now, I'm trying to figure out what your loyalty plan is these days, because this is something that you have brought in. You've also brought in app ordering, momentum. It sounds like everything's going. These are all your specialties, and they're working.
Yeah, so we launched mobile order in Q4 of last year. We're now at 13% penetration in mobile orders. That's really growing.
Could it go even higher?
And it could go higher. What we want is we want our customers to order in whatever way they want. And so that channel was clearly something that was popular with a lot of customers. That's providing a really awesome on-ramp to our Dutch Rewards program, which is now at 72% of transactions. So very high. We can have conversations with our customers. They get a lot of value out of that rewards program.
There are a lot of people who say, look, Jim, you like Starbucks. You can't like the stock. You can't like that and at the same time like Dutch Bros. I think that's stupid. Would you agree that there's room for everybody?
I think this is a really large and growing market. And half of our beverages are coffee, but half are energy and other types of drinks like lemonades and teas. So we're really the category creator of the customized energy drink.
Now, do you think that there really is a move away from alcohol? And the reason where I'm going here is that only a mocktail to me is like some of your drink. I happen to like mocktails. I don't drink a lot of alcohol. And they seem like that you're creating new drinks that are like mocktails for the Gen Z people who don't seem not to like to drink that much.
Well, I love mocktails as well, and I would share that I think what it is really as Gen Z is coming into this market, they loved iced. they love customized and creating their own drink. And so we have a whole plethora of drinks that you can choose from, but we also will work with you to customize it for yourself. And I think that's what's really working.
Absolutely. Now, Christine, one of the things that I'm getting tired of it, but I know all the restaurant stocks, they're all down big. And that's because people feel the American consumers fed up with inflation, doesn't have the money. I look at your numbers and I think maybe the American consumer just wants to be entertained and have a good time with a drink, with food, and that you're more than just a liquid.
Yeah. I think that we all need something to brighten our days. And when you come through our drive-thru, I think that's just what we do, is that we celebrate with you. We give you a great drink. We listen to what's going on in your life. And I think that all of those things are just incredibly important right now. And having that little bit of connection is something that makes our days better.
Okay, now I know people who don't have one think that what you just heard is fanciful. Having experienced it, I will tell you it's spot on. Christine Baron's the presidency of Dutch Bros. Thank you, Christine.
Thanks, Jim.
Everybody's back after the break. It's time for the lightning round. One save stock set by buy sell so such as good another call stock what's that time step per square to the buy you play this out. And then the lightning round is over. Are you ready? Ski that. I don't care about money. Let's start with Chase in Illinois. Chase.
Hey, Jim. It's Charlie from Chicago. I'm a longtime listener. Looking forward to getting your insights. I know you don't like companies that are pre-revenue, but a recent IPO that has come across my radar is a financial security company whose technology has the potential to save Swift banks over $40 billion a year and has applications in the post-quantum world, stable coins, defense contractors, gambling industry, and payment processing. Would love to hear what you think about the ticker BTQ. Thanks, Jim.
Okay, look, I think that's going to be yours. That's a speculation for you. If you're going to speculate in quantum, for me, it's going to be D-Wave. It's not necessarily the best there is in terms of, because I really believe in IBM's quantum, but I will say that D-Wave is my choice. Let's go to John in Massachusetts. John.
Hey, Cramer, how they hanging tonight?
All right, what's up? Good big night.
Listen, one of your old favorites, Mr. Myers, I understand you kind of were thinking about changing your mind on it.
I'm backing off on it because I got to tell you, I'm trying to see some good news in this Cobenfy that I was really all in on, and I'm not getting that news yet, and the stock is telling me I'm wrong. I don't like a stock telling me I'm wrong and not listening, because you know what? Even though I got a problem with hearing, I can hear the footsteps of the people leaving Bristol Myers. So that's what I feel about it. It is in the Chapel Trust big meeting on Thursday. We'll have to suss it out a little. Charlie in Georgia. Charlie.
Hey, Jim. Thanks for taking my call from beautiful Lake Oconee, Georgia. Been a long-time follower, my friend.
Thank you.
My question is regarding Baidu.
Baidu's good. Baidu's good. Baidu and Alibaba are good. Now, they have moved. They have moved a lot. Baidu's up 56%. But if you're going to own Chinese stocks, you want to own Alibaba first and Baidu second. And I want to go down to Georgia bad. Let's go to George in Massachusetts. Not the same thing. George.
Hi, Jim.
George.
I've been thinking about buying stock in Brinker International.
I think it's the right level to buy Brinker, but you have to understand 10 times earnings does matter. But the restaurant group is radically out of fashion. So if you're going to buy some, let's say you want to buy 100 shares, you buy 25 here, and then you have to wait. I will not sanction buying more at this level. Let's go to Mike in Georgia. Mike.
Booyah, Jim.
Booyah.
Love everything you do, the club, the books, the show.
Thank you.
For some reason, though, I didn't take your advice on the stock a couple of weeks ago, and I've been taking a terrible beat down ever since. What in the world can I do with United Rentals at this point?
You can hold your right. That was just all people turning on the data center. They heard that Sam Altman and OpenAI was spending too much money, and people were saying, woe is me, data center. So let's come down to a level where now I think it's okay. Let's go to Jim in New Jersey. It could be me talking to myself. Jim.
Hey, Mr. Cramer, how you doing, buddy?
All right, neighbor, how are you?
I'm all right. Sometimes I was called the Mideast Eel, man, when I was stationed overseas. But listen, wow. I even watched you back then, buddy, when you had hair and you were sitting across from Mr. Ludrow. Okay, I remember you back then.
Yeah, that's
Plus, you're
true.
called Ragu, so you're a great guy in my book.
Ragu's good. I
That's
like
why-
Ragu. I got rigatoni. I got Ragu and Tony. Can you believe it? These two knuckleheads. How can I help you?
I love you, man. You grow tomatoes and you had a dog named Ragu, man. That's
You betcha.
incredible.
Why not?
Well, hey, because you're from the Northeast, man. You're a Northeast guy.
Done your way. Done your way, partner. How can I help?
All right. Because of you, I get to watch you in the morning and at night. Because of you, buddy, I've got a great retirement. Now, what I need to know is I like a little speculation, okay? And there's a company down in Texas where they grow the big guitars, like Steve Miller says. It's called NUAI.
Well, man, you know what? I'm a joker and I'm a toker, but I'm going to tell you I like Lindy even more. But if you want your spec to be that, I am going to bless it. And I'm speaking with the pompatus of love. And that, ladies and gentlemen, is the conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab.
There's room for more than one winner in this race for GOP-1 weight loss supremacy. But some of these winners are going to be bigger than others. This morning, the gang on the Squawk on the Street grilled Pfizer CEO Dr. Albert Bourla about his company's $10 billion acquisition of Metsera, a drug company that's working on a monthly GLP-1 shot. Pfizer is paying $65.60 per share up front, plus contingent payments of $20.65 per share tied to specific milestones. Now, you might wonder why Pfizer would bother moving into a market that's now owned by Eli Lilly, which I think has beaten back Danish Novo Nordisk, maybe even into submission. After all, Lilly's on the market with a very effective once-a-week shot, but more important, it's soon going to have a pill version that could be gigantic. People hate shots. No wonder Lilly's stock vaulted nearly 5% today, on the verge of becoming like the first non-tech stocks to cross into the $1 trillion circle besides Berkshire Hathaway. But I say not so fast. As much as I like Lilly for the Charitable Trust, where it is a very big position and we're not a seller, I'm mindful that you can't take anything for granted in this business. Take cholesterol, which we talked about earlier with Amgen. Back in 1987, Merck invented the whole class of statins, the first drugs to truly lower cholesterol after it was definitively linked to heart attacks. Merck's Mevacor was not an immediate sensation, but then it took off and became a billion-dollar drug. I made a fortune betting on that one in the 80s. But 8 years later, Warner Lambert developed another statin, Lipitor. Initially, it wasn't perceived to be much of a rival, but then in 2000, Pfizer bought Warner Lambert for $90 billion. And that was in large part because it needed a blockbuster, and boy, did it ever get one. In the early 1990s, Merck turned its focus to a new statin called Zocor, but that drug sales peaked in 2002 at $5.6 billion. Pfizer's Lipitor peaked at $12.9 billion in sales in 2006, one of the best-selling drugs of all time. Lipitor was more powerful and could be taken at any time, while Merck's Zocor had money restrictions, wasn't as effective. Can Pfizer win again in the GLP-1 space? Look, the company it just bought, Metsera, has a shot that only needs to be taken once a month instead of once a week like Lilly, but it doesn't have the efficacy of Lilly's shot yet. Given that people historically hate to take shots and many eventually stop taking the injections, a once-a-month dosage seems a terrific idea to me. But Lilly's spending a fortune to develop a pill form of the drug that you can take every day like any other medication, and that could be more popular than any shot. You're much more likely to stick with a pill than an injection. Plus, one of the biggest drawbacks of the current GLP-1s is that they cause you to lose fat and muscle in equal measure. These drugs make you thin, but they make you weaker. However, Lilly's working on a shot that's more targeted. It will attack fat to muscle at a 3-to-1 ratio. Still, I think Pfizer's very smart to buy Metsera in order to get a piece of the GLP-1 pie, even if it takes 3 years to be approved and who knows how much time to scale the needed factories. But it could have another Lipitor in its hands, and even if this isn't Lipitor Part 2, it's definitely worth $10 billion to get into what may be the biggest class of drugs ever sold. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here, Mad Money. I'm Jim Cramer. See you tomorrow.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.